This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Thursday morning, inching slowly but steadily towards the end of the week. Well, how are global cues, as we always start with? They're kind of mixed. That's perhaps the best way to put it. Lots to talk about here, as always. Guys, hi, good morning.
Hi, morning. I think the optimist in you has woken up today because you said mixed, but I don't know if, the bulls are looking at it that way, considering the way crude is going and the way the US 10-year yield is going. So I think you're feeling good about this morning.
Just look at the market and what it did yesterday, right?
Yeah.
And I think that is what is kind of sparking that hope, not optimism, but that hope that maybe it's not going to be as bad. Let's just quickly tell you, how the trade setup really stands as we begin this session. I'll start with yesterday's session, right? So the Nifty saw a solid bounce. Now, we basically broke below 19,600 early in the session, made a low of about 19,550 or so. 554 was the low. But by close, we were back above 19,700. The 61.8% retracement, which we've been putting out, is 19,605. So that got broken intraday, but there was a 100-point bounce on top of that. And that's the reason why I'm saying it's a real body, good, solid bounce that we saw in the session yesterday. It was not alone, India alone. I mean, that has to be noted. Asia started recovering within the first hour of market open here. By the time we hit mid-afternoon, Europe started those markets were higher, and US futures were indicating a 1/3% sort of uptick as well. So this is the final close in the US. The Nasdaq is up about 1/4%. The S&P is more flat. I mean, so you look at the other indices, Dow and the Russell 2000, mostly flat on the equity side. But equities is not the story in the US. It is what is happening on yields, it's what's happening on the dollar, it's what's happening on oil prices. And then, let's get straight to that. And that's why I'm saying that price action remains adversarial for emerging markets. Price action in terms of bond markets and the other markets, not equities. So the 10-year went up 7 basis points on top of what it did the prior session. It broke back above the highs of the prior session, and we ended at about 4.61%. That's back to fresh 2007 highs, right? So this is the troublesome part. This is basically the risk-free rate, the global risk-free rate, and it's an anchor to rates around the world. And when this moves up so sharply in a short period of time, I mean, investors and everyone will sit up and take notice. It's got implications through and through across the board. The question is, will it kind of cool off? Will momentum flag here? Because there was no real news flow for this to move up another 7 basis points overnight. There was no big data point or, economic data which beat expectations or anything of that sort. Nothing. Now, on the back of it, the dollar is also pushed up, pushed higher to new year-to-date highs. It's now, at 106 points, closer to 107, right? So again, this is bad news for emerging markets and bad news for commodities, etc. as well. Dollar is on track for the 11th straight week of gains. And in this period, by the way, the dollar index has gained 6.5%. So that's quite something. Oil prices are also running higher, and that is the third leg, which I think is the problem area. Oil prices ended almost 3% in the green. They are now at $96.50 a barrel. And there's no sign that that's cooling off either. Overnight, we had the EIA confirming that oil stockpiles in the U.S. have dropped to critical levels. So we'll this is something we'll come back to and discuss because implications as well. On the U.S. government shutdown, today is Thursday, right? The government shutdown, so to speak, without a spending compromise between the Democrats and the Republicans happens over the weekend. And still, there were some headlines out of Washington, but there was nothing which indicated they're close to some sort of a compromise. Now, I have to say, it always gets done, right? It's a sort of yearly kind of annual drama which plays out and then it gets done. That's been the history for the last 40 years, no less. And hopefully it'll get done this time around as well. On the way up, just to kind of tie all of this back to levels, Nifty resistance is at 19,759, which is, by the way, the 20-day moving average. We're very close to it as of yesterday's close. On the way down, the low of yesterday, day before yesterday is yesterday, which is I'm getting mixed up with the days. Wednesday's low is 19,554, and that should not break on the way down. There's 150 points away, a distance between yesterday's close and the low, so I think that should work. And on the Bank Nifty, defended Monday's low of 44,400 on a closing basis. We ended at about closer to 44,600. Bank Nifty, although is the weaker of the two indices, something we've pointed out consistently. Resistance for the Bank Nifty comes in at 44,778, which is the 61.8% retracement of the August to September move. And then, the 20-day moving average, which comes in at 44,000, almost 45,000, 44,998 is that level. So those are the two numbers to watch out for on the way higher. The GIFT Nifty will come up on your screen. I would still say stay on the sidelines. We got a decent move yesterday, but it's just not looking very constructive out there with what the three things are doing: yields, dollar, and oil prices. So I would, the recommendation would be, why take a chance? Especially this is, of course, all trading, day-to-day advice. Why take a chance? Stay on the sidelines. Watch how all of this develops. Hopefully, those three things will cool off, and that will provide a clearer, more constructive picture in the near term. Sonia.
Absolutely. The bears have the upper hand, right? At least in the last fortnight or so. And it looks like that could continue even today. Today could be a day of profit taking. That's the sense that you get when you look at a lot of the internals, right? The starting tick on the GIFT Nifty is about 10 points lower, but it could get worse from there given what we have to deal with. The biggest headwind, of course, as we've been saying ad nauseum, is the way Brent crude prices are rising. That's also because what's happening in the global markets. The US crude stockpiles have fallen substantially, and hence there are supply concerns rising across the globe. In fact, adding to the supply tightness, yesterday there was a comment from the Russian President Vladimir Putin that the government in Russia should ensure that retail fuel prices stabilize after a jump that was caused by an increase in exports. So there is a big supply pressure that's kicking in across the world, and that is what is giving rise to Brent crude price. And of course, that doesn't bode too well for our own market. So that is the big headwind that we have to deal with. The other big headwind is the US 10-year yield, which is now at a 15-year high of, I think, 4.6%. So it surpassed that, 4.5% mark. That doesn't bode too well for risky assets either. And hence, I'm saying that it could continue to be a day of profit taking for the market, a sell-on rally market. Today, of course, there's no rally expected. But if you look at what's happened in September, right, our markets are not bad. It's still a gain that we've seen in September compared to the rest of Wall Street. Look at that, NASDAQ down 6%, S&P 500 down 5%. So in that sense, the Nifty continues to be in a range. 19,700 to about 20,000 is the range as of now. Yesterday also we closed at the high point of trade. So the bulls are trying their best to fight back, but the global cues are just too strong, and sort of putting a lid on the market gains. And perhaps that could be the way it shapes up today. By the way, Europe also had a deep slide overnight. So things are not that great.
Well, that's right. Sonia, and yesterday all the attention was on the banking names, but two large cap stocks, they came in there and they performed. ITC and Reliance Industries, the intraday chart should tell you the picture. The reason that the Nifty ended at the high point of the day was because both these two, they were the darlings till recently, and both of them went through a phase of correction. And yesterday, in fact, they did well. So let's hope that one of these stocks or both of them, they can support the Nifty, because otherwise, cues are looking a little bit feeble this morning, as Sonia as well as Prashant said. Now, the Nifty ended higher. You'll be happy about that. But the traction continues in the broader markets as well, because you had the mid-cap and the small-cap space. There were plenty of stocks that were doing well. I'm not sure how long this can last, because dollar index, crude oil prices, yields, all of them have moved to not very favorable levels. The Nifty is up close to around 1.5% in September. Remember, we've corrected a goodish bit, close to 500 points from the recent peak. But, today we play out monthly expiry, so the final hour of trade will be rather volatile. The bulls, they'll be counting on yesterday's low, which was closer to around 19,550. And we said yesterday that if you have the appetite, you could buy closer to that level. And that trade did work out yesterday. So that's the line in the sand, 19,550. What did the FIs do? Well, they added short positions yet again. Close to around 14,000 short contracts is what they added. And the short positioning now moves to around 55%. Just around 7-8 trading sessions ago, this short position was only 35%. So it's been a big bounce. From 35%, it's gone to around 55%. And the chart should come up for you on the screen. Just around 5 sessions ago, the FIs were net long with close to 20,000 contracts on the net long side. Now that's come down. It's now a net short position. If you'd got a graph up, it would give you a better picture. From a positive number, that's from a net long position of 20,000 contracts, it's become a negative, a net short number of close to 20,000 contracts. What are the levels you're looking at? Since it's expiry, we're looking at two strikes. That's the 19,800 call, 19,600 put. Both of them have close to around 1.5 crore shares out there. But you'll say get a little bit narrow on that range. So that's the 20 and the 50 DMA. The 20 DMA is at around that 19,760. That's going to be an important level. I'll tell you what, if you can get past that and trade above that level, then you'll be in for a bout of short covering because this market is net short. But otherwise, on the downside, the 50 DMA is the level that you should be looking at before you go to yesterday's low. So keep an eye out on that mark. It's going to be that sort of a range-bound day. But if you could break those levels, particularly the 20 DMA, then the bulls will feel that they are in business. But otherwise, the bears will be feeling much better this morning, looking at all the cues that are stacked up.
Okay. By the way, lots to talk about over the next 2.5 hours. So let's kickstart the show very quickly. First up, we have an opinion from Ridham Desai of Morgan Stanley, who says after two strong absolute and relative quarters, the broad market could give up their performance to large caps as global trading conditions appear more challenged. He says given the election calendar, the realized volatility of Indian stocks may have troughed in the short run. He adds, while the quarter ending September is likely to be softer quarter on quarter for earnings, the coming quarter could produce an upside surprise in terms of growth, thanks to both the festival season and special events like the Cricket World Cup.
Okay, Mishra Das of JP Morgan weighs in as well. He says that Asian equities outlook is mired and stickier than anticipated inflation, a strengthening dollar and rising volatility. He says the seemingly dull index in 2023 hides dispersion and multiple rotations, and we are likely to see more. He adds, as markets grapple with an environment of higher for longer rates, we see global equities and particularly long-duration growth stocks coming under more pressure.
All right, let's also get you some money market views this morning. We begin with Parul Mittal Sinha of Standard Chartered Bank. She says that the dollar INR has inched up higher during the week, driven by dollar strength, higher oil prices, and continued FPI outflows. She expects the dollar INR to trade in a range of 82.80 to 83.50 in the coming week, and continued dollar strength and higher oil prices.
Well, on bonds, we have Dhaval Dalal of Edelweiss, who says bond market sentiment is likely to be subdued amid rapid rise in US Treasury yields and hardening crude oil prices. He says this will likely offset positive news on borrowing index inclusion and good monsoon recovery in September. He expects the 10-year benchmark yield to trade in between a range of 7.15 to 7.25% in the near term.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But we're looking at Bharti Airtel, Reliance Industries, MCX, Barbecue Nation, Dixon Technologies, Trident, Oberoi Realty, and ONGC. All of them will be reacting to positive news flow. While on the flip side, Vodafone Idea and ICICI Lombard will be reacting to negative news flow.
Okay, well, that's basically the lineup in terms of specific stocks. But this is a macro kind of market we are in. This is a sort of macro global pullback phase we seem to be in right now. Arvind Sanger is with us to talk about that, managing partner at Geosphere Capital Management. Arvind, great to have you with us here on the program. Thanks very much. You know, the so-called global risk-free rate is now closer to 5% than it is to 4%. That's quite something. What are the implications, Arvind? And can emerging markets stay immune? One view, why I'm hearing more and more, we had Mark Mobius yesterday who was saying, well, no, the answer to that is, well, no, they can't stay immune. But a market like India perhaps will be lesser affected because of some of the longer-term structural drivers which investors are focusing on. Go on.
Well, yeah, and let's not forget oil prices. I know you were talking about 96, but as I'm looking at the live quote right now, it's just crossed 97.5. So, you know, oil prices are fast on their way to $100. Clearly, you know, the bond market is signaling concerns that inflation is going to prove to be more resilient, and therefore interest rates are going to have to stay stronger, higher for longer. And all of those are reflected. And so when we come to emerging markets, clearly high, risk-free rate means, bigger discount rate, therefore lower multiples. And India is not immune to that. I think, where obviously, you were quoting Mark Mobius, where they and others like us, where him and others like us believe that in terms of the earnings growth side of the story, India is better positioned than a lot of other emerging markets. But where India is not immune to it is discount rates, right? The discount rates, the risk-free rate is going up. Therefore, that makes the PE lower for all markets. So that's the risk. And the one India risk where India is on a weak wicket as a significant commodity importer is, you've had a slightly worse than hope for monsoon. So you have some embedded potential risk for inflationary forces coming from there. Plus you have the oil price, which will cause current account deficit and other problems. And so therefore, I think, India has its own risks, which are not completely immune to what is going on in global forces. So yes, we've been talking about the biggest concern about India for us, the biggest risk was inflation. Inflation is obviously still a risk, India-specific and global. And obviously, the global inflation risk is also being expressed in the risk-free rate, which causes outflows from all emerging markets.
Okay. Arvind, hi, good morning. There's one more narrative, right, that India could continue to remain resilient amidst all of this global chaos, given that we have a big event upon us, which is the general election, which tends to be market favorable most times. You think this could be the case? Because if you look at September so far, I mean, India is up, 2.5%, while our peers like S&P 500 and NASDAQ are down about 4 and 6%. Do you think this resilience is something that can continue?
I think it'll depend. Inflation is bad everywhere, and India is no exception to that. So election or no election, if you get a lot of money floating in the system, which is typically what happens in a lead up to an election, that will only exacerbate the inflation problem. So let's not forget that that is part of the global narrative that is very important to watch. So liquidity sloshing around is good for spending. It is good for economic activity, but is bad for inflation. So I think it's one of those, be careful what you wish for, because there is no unmitigated good in that environment. And therefore, I would argue that, yes, there are some positive forces in terms of more liquidity showing up, more spending power showing up in inflation-related spending. But in a market where inflation is looming and interest rates are hardening, that may not be, all an unmitigated good. So therefore, yes, India has held up impressively well this month. But I wouldn't take that to the bank and start assuming that India is immune to what's going on globally.
Hi, Arvind. Nigel on this side. Arvind, what about the US Fed? They're talking about one more rate hike. You have a Fed spokesperson earlier this morning who is stating that maybe we'll do more than one rate hike as well. So that's a bit of a fear. How many do you think they can actually go ahead and do? And also the point on crude, that's a worry from an India perspective. It's heading towards $100, or do you think it's sustainable at these levels? Because at $90, most market experts said it's topped out, $95. Now it's on its way to $100. Your take?
Well, on the oil price, to answer your second question first, I don't see any obvious reason why oil price will suddenly roll over unless global growth and demand growth in places like India. Again, to get oil prices down, growth has to slow down. Because the supply side, it's clear the Saudis and the Russians and others are not going to open the taps. So demand is strong. Demand is, 103 million barrels per day, which is 2 million barrels per day higher than prior highs. So we are at all-time highs and it's growing. And India is one of the fastest growth in the world. So again, in a sense, India's economic growth is going to drive oil prices, is going to help drive oil prices, not the only factor. And the way you fix it is by slowing down growth. So again, be careful what you wish for. I think oil prices are on a strong upward trend. And we've been saying for a while that we thought oil prices would continue to stay strong. And so therefore, where they go short term, I can't say, but I would be very surprised if we don't challenge $100 sometime in the next few weeks or months. So I think clearly, from a growth standpoint, that is a risk for India, and India is not immune to that. You're absolutely right. High oil prices are always a brake on all economies, and India is one of the more sensitive ones to oil prices. So it is inflationary, and to the extent that it causes a demand response, which is negative, that is also demand and growth negative. So I think $100 is okay. I don't think it's killing the Indian economy. But if it keeps going, I think above 100, it starts to starts to impede the growth story.
And on the Fed, you expect them to do one more?
I'm sorry?
On the Fed, do you expect them to push through
Oh,
one
I'm
more
sorry,
rate
I forgot
hike?
to answer that question. Yeah, that's a tough one. The data so far has been headed in the right direction on inflation coming down. But again, with the inflation and, now you have, labor strike, other things, you've talked about the government shutdown, which I think is likely. So there's a lot of competing forces. We've avoided defaults in terms of extending the debt ceilings, but we've had several shutdowns before. And so the shutdown it's no guarantee that there won't be another shutdown. It could last for a week, it could last for 2 weeks. It could be, I think, during Trump's presidency, we had a 30-day shutdown. So I don't know what will happen there. And again, that will play into a rate decision, right? So if the shutdown itself is growth negative, because people talk about 0.2% hit to GDP for every week they're closed, then that may stay the hand. So there's too many things at unknowns to be that confident that there's another rate hike coming. But I think the Fed is talking very hawkish, because I think its concern is that with oil and other factors that could drive inflation to be sticky, they need to give a strong signal that they're prepared to do whatever it takes. So I think it's a difficult one, but I don't think there's any all clear signal here that will cause people to start saying risk on.
Okay, the caution in your voice is flowing through. Arvind, thanks a lot for joining in. I think that caution is much needed given the way the markets are, doing as well. Thanks for your thoughts. Let's slip into a quick break. On the other side, our entire list of top 10 stocks. Our research team will be here to help you prep for the day. Stay tuned. All right, let's begin the day with some stock ideas. In fact, all the stocks that are in the news. First up, you have the TRAI data that came through. So a lot of the telecom companies will be in focus. Reema's here to tell us the latest on that. Reema, morning.
Thanks so much for that. So TRAI has released July subscriber data. The key takeaway is Jio and Bharti continue to see subscriber gains, while the other two players, Vodafone Idea and BSNL, continue to see a decline in their subscriber base. About the numbers, Jio has added 3.9 million subscribers. Bharti has added 1.5 million subscribers. So Jio's subscriber addition is more, while Vodafone Idea, BSNL have roughly lost 1.4 million subscribers. But the key to track are the subscribers who are active on the network. And here Bharti has added more, subscribers on a month-on-month base versus Jio. But all in all, the key takeaway is that this market share gains in favor of Bharti and Reliance Jio continues at the expense of Vodafone Idea and BSNL. Back to you.
Okay, all right, Reema, thanks a lot for that. Well, MCX, Sudarshan had told us earlier that, MCX is likely to go with the new technology platform, and bang on. They've made their official announcement as well, so the news break is confirmed. Sudarshan, fill us in with more.
Good morning. MCX stock will be in focus today. The CNBC-TV18 news break of company using new technology platform from the first week of October is now confirmed by the company. In today's disclosure to exchanges, MCX has announced using the new technology platform from October 3, the very first trading session of the next month. And for the same, Clearing Corporation has also planned to conduct mock session on October 2 in order to allow members to connect and participate during the mock session. We also need to remember that MCX has an agreement with 63 moves to use its technology till December. And what we learned from our sources that MCX will keep this technology till its expiry in December and use it as a backup if needed. The new technology that is going to live on October 3 is being serviced by TCS, which MCX and TCS had signed in 2021.
All right, thanks very much, Sud, for that. That's an exclusive, and congratulations for that. We broke that story here first. Now, Barbecue Nation is the next one we're going to focus on. That's going to be in focus. They've signed an agreement to acquire a restaurant chain. Mangalam has got more details. Mangalam, morning.
That's correct. So, Barbecue Nation, along with its subsidiary, has announced that they will acquire about 53.3% stake in this company called Blue Planet Foods for about 23.1 crores. The reason why they do that is because Blue Planet runs an a la carte pan-Indian cuisine restaurant chain under the brand name Salt. They have around 6 restaurants, largely in the southern states of the country itself. Blue Planet, which runs these 6 restaurants, has a revenue of close to around 33 odd crores, which is 2.5% addition to what Barbecue Nation's own revenues are right now, and an EBITDA margin of 19.4%. Barbecue's own revenues, or rather margins, are close to around 18 to 19% itself. What Barbecue Nation liked about them was an attractive unit economics, strong brand along with high ROCE. They valued this acquisition at 7 times EV to EBITDA as well as 1.3 times EV to sales, which is at a discount to Barbecue's own valuation. So this should be a bit of a positive. The only thing we have to watch out for is if they have an agreement to buy the remainder stake and at what valuation.
Okay, well, that's the Salt brand that they run, right? Blue Planet. It's an a la carte pan-Indian cuisine restaurant that they run under the name Salt. Well, thanks a lot for that. Surbhi is with us to talk about more stocks that are in the news. Surbhi, over to you.
Hi, the first one on my radar is Dixon Tech. Now, the company's arm Padgett Electronics has signed an agreement with Xiaomi to manufacture smartphones. They will be manufacturing the smartphones in their plant in Noida. Now, in Q1, the company had indicated that the production of these smartphones will start in September or early October of calendar year 2023. So that's on track. In phase 1, they will be manufacturing 500,000 smartphones, and in phase 2, they'll be manufacturing 1 million smartphones per month. So this was largely known, but still a positive. ICICI Lombard, they get a show cause notice from the GST department for 1728 crores. This notice pertains to non-payment of GST on the co-insurance premium during the period of July 2017 to March 2022. So a bit of a negative news there. Trident, the company enhanced its capacity of the sheeting business and also increased the cogen power plant capacity. The total capex done was 400 crores. Of which the debt was 290 crores and the internal accruals was 107 crores. And lastly, Oberoi Realty, the company enters into a development agreement for redevelopment of land measuring close to 13,500 square feet at Tardev, Mumbai, and the company expects to generate a free sale component of around 2.5 lakh square feet from this redevelopment.
Okay, all right. Thanks a lot for that, Surbhi. Well, let's get in Manisha Gupta as well, because the big move overnight was crude oil prices. Morning, Manisha.
Oh, well, absolutely. And nearly a 3% of gains in the overnight markets. And that brings us to a 30% gains in this quarter itself. That's the kind of run-up that we've seen in crude. We're trading at a 10-month highs right now. And the markets are reacting to, one, the tightness that the street is expecting in the fourth quarter with the kind of output cuts that we've seen from OPEC. Non-OPEC, within that, U.S. also has seen production decline. The U.S. inventories have continued to decline. And the markets do believe that the $100 mark that everybody has been talking about, and while we're just a couple of dollars away from that, could be hit as we start into October. The markets have continued to rise even as we're looking at the US dollar index gain. The data cannot come in so positive. It's all about the tightness in the international markets that has led to this run-up.
All right. Thanks a lot, Manisha, for that. But let's do one thing. Let's do a quick recap of our top stocks. Stocks with positive news flow today. There's Bharti Airtel, Reliance Industries, MCX, Barbecue Nation, Dixon Technology, Trident, Oberoi Realty and ONGC. While stocks with negative news flow, there's Vodafone Idea and ICICI Lombard. Well, okay, let's move on. Sudarshan joins in now to tell us about the brokerage notes that you can focus on for the day. Sudarshan, over to you.
In today's brokerage corner, we have three stocks that are going to be in focus. First one is L&T. UBS has given buy call and increasing the target to 3,600 from 3,040. It says cyclical earnings momentum and improving capital allocation make company a better play. And cyclically positioned P&L, stakeholder focus and growth appetite for the company have been improving. The second stock is Health Global. Motilal Oswal has initiated coverage with a buy rating giving target of 840 per share. It says companies crafting a differentiated ecosystem in healthcare, and the clinical excellence is driving robust operating performance. On earnings front, Motilal Oswal expects company to report revenue, EBITDA, profit of 14%, 17%, 26% CAGR over FY23-25. The last stock is Cummins. UBS has written on the stock giving sell rating and a target of 1,350 per share. It says best phase of short cycle-led earnings momentum are behind for the company. It is cautious on exports and sees increasing risk of downgrades over coming quarters.
Okay, well, Sudarshan, thanks very much for that. That's an interesting sort of list of ideas. By the way, we had the management of Healthcare Global with us yesterday on reports that, CVC Capital Partners, the private equity firm, is looking to sell their 60% plus stake in the company. And we put that to the promoter of, Healthcare Global, and they didn't say no. And you can sort of go online and watch that interview. It was an interesting chat. We'll take a quick commercial break here. Up next, Deepan Mehta of Elixir Equities will join in for a quick fundamental stock analysis, what he's watching out for. A little later after that, we'll have the management of Mold-Tek Packaging also joining in to talk about their business outlook. Stay tuned.
Welcome back. Hope you're having a good morning. For starters, the gift nifty suggesting we open up more or less flattish. But remember, today's expiry day, so volatility is likely to pick up as the day progresses. But plenty of stocks to discuss. Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. Good morning. Thanks so much for joining in. Deepan, I wanted to ask you about MCX. The problem for them was they were not able to migrate to the new technology. Now, the stock has run up a goodish bit in anticipation that they'll finally be moving, and it's officially come out as well. How do you approach the stock at around this 1900 odd level?
Yeah, good morning, Nigel, and thank you for having me on your show. First, a disclosure that we have investments in MCX. And I think amongst the entire exchange space, MCX perhaps has the best dynamics in terms of risk return. The more important story in MCX is the growth of options trading. And earlier, I think options was eating into the value of the futures trading, but now I think futures volume has stabilized and option trading is really giving in the alpha for MCX. And exchange businesses are high operating leverage. So whatever revenues they get from options trading, that goes more or less to the bottom line. And this particular development of them shifting to the TCS platform is huge for MCX because it will save a considerable amount of technology costs for the company. And I think the profits over the next 2-3 quarters can jump many-fold because of these developments. So very positive on MCX. And I think the price rise which we have seen seems to be fully justified.
Okay, Deepan, hi, good morning. My colleague was just putting out a couple of these brokerage notes, right, that have come in this morning. And the one that stood out for me was Motilal Oswal initiating coverage on Healthcare Global. And what stands out is the target price. I mean, they have a target price of 840 rupees a share, while the stock is currently at, what, 300, 350, right? Do you see such a big upside? I mean, there is, of course, all of this talk of CVC exiting their stake, etc. But overall, how are you looking at the business?
Yeah, good morning, Sonia. See, I think the Healthcare Global is one company which has not played to its true potential. Basically, it has all these oncology clinics across the country, and it was in an investment phase, and the new oncology centers have not yet really started contributing to the profit. But amongst all the healthcare companies, oncology space is one which is growing really rapidly because of greater awareness and the treatments which are available. And they had an issue with debt, but that got resolved with CVC pumping in the money. So the potential is there, the scalability is there. It's just that they haven't delivered in terms of profitability. And maybe, over the next 2-3 years or so, once the operations stabilize and they start getting out of the investment phase into the actual profitable phase, then you may see the profits go up significantly. So I would say that at present, I think it appears to be slightly on the expensive side, but it's a company really worth watching. And the minute you feel that the quarterly numbers are going to start to improve significantly, that's time to make an entry to the stock.
Just want to put out a few names, if you can follow me and put these intradays up. Look at the stocks of REC, PFC. These are the big winners from yesterday, right? It jumped and did very, very well. So a bit of a halt between 1 week halt and then the move. I'm not sure if this started again or restarted, but very strong gains. Look at Ujjivan. That was another one. REC, PFC, and then Ujjivan will come up on your screen. Manappuram did very well yesterday. I mean, that's another one. A name like Senco, which is the jeweler from East India, that has started to participate in this week has been fantastic for Senco. Borosil Renewables, MapMy India, Atul Auto went up about 6% or so. It was a buzzing screen in the broader markets. Mid-cap index, remember, ended about 0.75% higher, and the small-cap index was up a full 1% or so. Devan, good morning. Any thoughts on Senco and the move it has been seeing?
Good morning, Prashant. I saw the entire list of stocks and I said, except for Senco, I can talk on any of the stocks.
And I had to ask you.
I mean, let's talk about PFC, REC, Ujjivan, all fantastic stocks, low price to earnings multiple. Ujjivan has all the NPA issues behind them. PFC, REC. Finally, I think we are seeing growth in their loan book and really attractively valued. In a way, quite safe stock because they lend to the government agencies and the main borrowing also is through bonds, which is pretty much stable. And Atul Auto, I think it's more about an electrification story. As soon as the new product launches start to get going, you may see the revenue flow coming in significantly. So more or less, I think I can cover all your stock except Senco Gold.
Okay. I wanted your thoughts on some of these packaging companies, and I know that you do track this space closely. So Mold-Tek Packaging is, the stock that we're looking at. I'll come back to you. We have the management with some comments as well, so I'll come back to you in a bit. It was a very strong set of numbers the company had reported in the quarter gone by, and they also saw a 16% volume growth in FY23 on the whole, on the back of a continued surge in demand, incremental investments in new projects. And Nirmal Bang put out a note where they see the company's big focus area on capex and its pharma packaging business as the key positive. So to discuss more about this, we have Lakshman J. Rao, who's the Chairman and Managing Director at Mold-Tek Packaging, joining us now. Mr. Rao, thanks a lot for joining in. If you can just start by telling us, demand is solid. We do know that, and it's reflected in your numbers. But which are the areas where you're seeing maximum amount of demand come through now? And given that it's we have the festive season upcoming, do you see a further surge?
Good morning, all. Yes, food and FMCG continue to be our major growth area. Our square packs, which were introduced for various edible oils, are found a great application in cashew nut packaging. And most of the tins are getting replaced with our smart IML containers, which are available in 5, 10, 15, and 17 liter size. And they are not only used for India, but also for exporting cashews. So that is one new segment we identified in the last few months, which is picking up rapidly. And as you correctly said, the sweet boxes and other restaurant packs are picking up in this festive season. And we hope that from third quarter onwards, there'll be a good surge in the demand for these products as they're replacing the conventional tins and conventional boxes.
So if you're getting a higher amount of demand, of course, in the festive season, you also have the pharma space where you're doing pretty well. What kind of growth, volume growth, are you penciling in for the full year, FY24?
See, in pharma, we are not just entering, as I informed earlier. We are starting our operations in pharma in November, December, and it may take a couple of months more to get the approvals and audits cleared by the pharma companies. We are in touch with several of them, and we are coming out with a range of products instead of simple bottles and caps. So that may give us a quick entry into pharma packaging, which is a huge potential. But the numbers would start from the Q4 of this year and predominantly grow in next financial year.
Okay.
So, my question was more on the volume growth for the full year. I think you did 16%
the volume growth for full year,
yeah.
We are aiming at 10% now because in the Q1 there was several rains and disruption in the seasonal demand for ice creams and dairies that has impacted our growth. But in spite of that, we still hope to cross 10% volume growth in the current financial year, which will almost double, or at least it will be in the range of 15 to 20% from next year, as 3 new plants of ABG, Aditya Birla Group, will be starting commercial production from December, January this year itself, and will be contributing significant numbers in the next financial year. Apart from our pharma, where we are investing 40 crores this year, we'll be getting into production by November, December this year, which will also contribute significantly from next financial year. So we see more growth coming in from the next financial year in all these sectors.
All right. Hi, Mr. Rao. Nigel on this side. Good to speak to you after a while. So volume growth of closer on 10% is what you're looking at for this year. What about the EBITDA per kg? If you could tell us, what will that number be for FY24? And also on the pharma segment, since you're going to be launching pharma in this year, for FY25, what kind of a revenue number can it give you?
See, we are aiming at least 10% volume growth this year, and the EBITDA growth will be in similar lines. But next year is going to be a great year for us because of the pharma starting contribution from end of this third quarter, which will pick up pace by beginning of Q1 next year, I hope. And that should add considerable numbers, not only in the volume growth, but also in the EBITDA, because the pharma packaging EBITDA is much higher than our average EBITDA, almost 3 times our average EBITDA. So that should bring, even if they contribute 4 to 5% to our sales next year, that will be a considerable improvement in our EBITDA per kg in the year 24-25.
Looking for a number, EBITDA per kg, absolute number, 41, 42 for this year, and next year it goes up substantially. Give us the absolute number for both the years, FY24 and FY25.
No, this year probably will end up similar like last year in the range of 41. Next year it should...
Oopsie.
Some issue with that audio. I think we'll try and get back to him in a bit. But that's Mold-Tek Packaging talking about a 10%. Yes,
All right.
sir, go ahead. Mr. Rao? Okay, I don't think he can hear
Yeah,
me.
so the next year we also are
Please go ahead.
in,
Mr. Rao, we'll just try one final time. Can you give us the EBITDA per kg number that you're targeting for FY24 and FY25? Okay, I think the line snapped. Okay,
I think you're having a bit of a troublesome morning. But let me just toss this question to Dipan because he tracks this stock closely. Dipan, 10% volume growth is what they're talking about. But if you map the stock, right, it's done nothing this year in a market that has been great for mid-caps. Why do you think that is?
See, I think that, companies go through these phases where there is soft volume growth. But from whatever I heard and whatever I know, I think it seems to be entering a new growth phase. First of all, I think these new paint companies which are coming up like JSW, Grasim, and Astral, they are growing their capacity significantly, and that's a huge market for Mold-Tek. Secondly, I think the foray into pharma, especially when they say that the EBITDA margins are going to go up because of increased sales to that sector, is quite good and inspires a lot of confidence from that point of view. Valuations, I think, are slightly on the higher side for a packaging company which is in the B2B business. So maybe at corrections, this could be a good company. But one thing I'll tell you, that this company has got some amount of pricing power, because in the past, when even raw material prices went up, their margins were not squeezed as much. So there's something I think about them being a key supplier, because of which I think they can sustain their operations. So generally positive on the company. Just want to try and see if there's an entry point which is at a more reasonable valuation.
Okay, all right. Deepan, stay with us. Let's now bring in Anuj, who's standing by on the big wall with a quick check on how he's looking at the trade setup. Anuj, good morning.
Morning, Prashant. Well, yesterday's second half was quite resilient for the market. In fact, if you look at what happened, the level that we discussed, 19,545, it was defended by 9 points, and the Nifty rallied about 150 points from the low point of the day. Now, normally, the first attack on the all-important support level is defended. It's the second attack which is crucial. So, let's see. Normally, if you don't test that, then the market refuses to fall. But if you do break 19,545, then perhaps a short trade will open. Otherwise, as long as 19,545 is holding, traders will try this market on a buy on dips basis. There was big rally also in mid caps, and advanced decline was quite stable. So that's another reason to be slightly positive on the market. Now, looking at the trade setup for the day, because today's monthly expiry, the all-important expiry, first support is 19,650, which is based on the options, and the bigger support, of course, is 19,545, which is the all-important support level. So I think this is the zone that the bulls will try to defend and perhaps buy afresh. On the upside, the first resistance will be 19,750, the falling 20-day exponential moving average, and 19,814, the highest call writing zone. And this is a zone in which perhaps there would be some profit taking. And if you start to cross 19,814, then perhaps traders would chase it with call options. On the bank Nifty, I think there's no trade till you see stability in HDFC Bank and ICICI Bank. Both have been quite volatile over the last couple of days. The first support here is 44,260, and the bigger support is 44,182. And on the upside, two huge levels are placed. First, the 50-day exponential moving average, which is at 44,809, and then the 20-day exponential moving average, which is placed at 44,958.
Okay, thanks a lot, Anuj, for that. Well, that's how the setup is looking as we get into this morning of trade. Let's take a quick break. On the other side, Mitesh Thakkar, Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Welcome back. As promised, let's get straight to our technical calls. Mitesh Thakkar as well as Sudarshan Sukhani joined us early this morning. Good morning, gentlemen. Expiry day, so things are likely to get rather volatile. Mitesh, you go first. We had a good bounce in the Nifty yesterday. How would you view trade setup today?
Morning, Nigel. The sense is that 19,550 came into play and we got a good bounce from there. Then if that level doesn't break, there's a good chance that we'll see more of what I would call as a time-wise correction. So it will be more of a consolidation. We were looking at possibility of 19,400 also being tested. That still is open. But if 19,550 repeatedly proves to be an important support and keeps throwing back the market and keeps giving you pullbacks, then I think this will be the flooring point. So initial feel is that 19,550, being held means that 19,550 to about 19,800 becomes the range. And we could see a few days of action, which is more of sideways within this range, but slightly choppy.
All right, Sudarshan Sukhani is also with us. Sudarshan, which way is the market headed according to you? Do you think this will continue to be a sell-on rally market? And if yes, what are the markers on the downside now?
Yeah, good morning, Sonia. See, for the last 3 days, I have been suggesting that this is a market where 19,600 is now acting as support. So for me, it was a buy on dips market with a stop under 19,550. That view continues. The market is likely to see some kind of consolidation, but if you look at a trade, the trade is still to buy. The buying should be done in the Nifty and the Bank Nifty. For the Nifty, the stop is 19,550. For the Bank Nifty, it's 44,000.
Okay. Gentlemen, good morning. In terms of individual trades, Mitesh, what would you do?
So I have more of buy calls today. Polycab made a fresh swing high, also a 52-week high. That's a buy with a stop below 5,300. And I would look for a target of 5,500. A buy on RBL Bank, which also managed to get past the earlier swing highs. So that's a buy with a stop at 240 for a price target of 255. And a buy on Britannia with a stop below 45.90. And here I would look for a target of 4,700 to begin with. And one sell call, that's on HAL. So I think after a long time, the stock comes into a sell call possibility or a sell side trade. If it breaks the pivot of 38.15, which is day before yesterday's low, then go short, keep a stop at 38.60, look for targets of around 37.25.
All right, and Sudarshan, how about you?
Well, Polycab is a buying opportunity. It made new highs. New highs are always, a good reason to go long in that stock. So buy with a stop under 5,100. IGL is an intraday short. The stock rallied. That rally fizzled out. Stop above 458. Keep it intraday. Short selling always intraday. And LIC Housing Finance again had a new closing high for the recent weeks. Not lifetime, but for the recent weeks. It's a buying opportunity with a stop under 455.
All right, let's do one thing. Let's take a quick commercial break. On the other side, we'll have the pre-opening rates. We will also talk about the IT space. Sandeep Agarwal of Sovelo Investment Managers will put focus on the IT sector after all that has transpired in the last fortnight or so. Stay tuned.
Welcome back. Well, let's get in some derivative strategies then. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, joins us on the show. Hi, Chandan. Good morning. What do you have for us today? Things will get volatile, but call on the Nifty first and then individual picks as well.
Good morning, Nigel. Sonia, thanks for having me. So yes, today is the last day of this month expiring. So some sort of volatility could be there. But if you look at the Nifty index on expiry to expiry basis, it's up by around 2.4%. If I look at the series volume weightage average, that is 19,800, we are slightly lower than the same. Weekly volume weightage average near to 19,700, we are near to the same. If I look at the open interest of the entire month, that is up by around 15%, near to 1.2 CR. So net to net, we have seen some long added. However, market witnessed some decline, but yesterday we have negated the formation of lower highs. So because of that, some sort of stability could be there. Some bounce could be there in the market. As of now, the broader range for the index is going to be in between 19,550 to 19,850 zone. For day point of view, with support of 19,620, will play a bounce of around 50-60 points or can participate in 19,650 call. Looking at Rollovers, we have seen 61% rollover with 0.56% roll cost. So that is indicating some sort of positive to range bound bias, even if we talk about the next week onwards. Looking at the Bank Nifty index, that is marginally up on expiry basis. We are lower than both the volume weighted average series and weekly. So here call writing is clearly visible at 45,000 strike. So some sort of underperformance could be there, but we have trading range in between 44,250 to 45,000 in the Bank Nifty index. Now looking at the stock wise, recommending to buy on Polycab. This stock is up by around 4% in this series. We have seen open interest addition by around 30-35% in the entire series. On last trading session, it has given a consolidation breakout of last 14 trading session. So expecting further 3 to 5% up move in the counter. One can buy with support of 50 to 50 and Polycab can head towards 5600 zone. Second trading area, that is buy on Escorts. We have positive on most of the auto name, including Maruti, TVS Motor and Escorts. So talking about Escorts, huge open interest added in the entire series. Open interest is up by around 63% and price is holding well. We have seen a fresh consolidation breakout. The stock is trading higher than its volume weighted average and call unwinding and put writing is clearly visible. And that also invites some short covering activity. So expecting further up move. Rollover is near to 73%, expecting total rollover to go near to 85-88%. So finally recommending to buy on Escort with a stop loss of 30 to 45 for an upside move towards 34.25 level. Last trading idea, that is buy on Bharti Airtel. Somehow we are turning positive on the selective telecom counter and price pattern is clearly turning upwards in the Bharti Airtel. This stock has seen open interest shedding, which clearly indicates short covering. So this is a short covering candidate. Fresh leg of rally cannot be ruled out. So recommending to buy with stop loss of 900. The stock has potential to rally towards 960 marks.
Okay. By the way, in pre-opening, a couple of rates should come up for you on the screen. Thanks a lot, Chandan, for giving us all of those ideas. MCX will be going live on that new technology platform from the 3rd of October. So the stock in pre-opening is actually up almost about 10% This is a CNBC-TV18 News break that has been confirmed. So that is definitely the stock of the moment. You know, a couple of other stocks. L&T is another one where UBS has actually raised their target price substantially on L&T. So do keep an eye out on that stock as well. More on that in a bit. But Dipan Mehta is still with us. Dipan, I wanted your thoughts on, you know, what's happening with L&T, because the view is in the run-up to the general elections, there will be a pickup in, you know, capex spending and private capex as well. And L&T has been one of the big gainers this year. Do you think we are in that 2003 to 2007 phase where a lot of these infrastructure and capex related stocks came back in a multi-year upcycle, or is this time different?
Sonia, first of all, a disclosure that we own shares of L&T. And you're absolutely right. You know, it feels like the 2004, 2007, if you go back to that period, L&T was the top performer in the Nifty at that point of time. And I think this time around also it is amongst in the top quartile in terms of performance. And the most interesting part about L&T is not just the domestic orders, but the way they are pursuing orders in the Middle East, I think. And those orders are with a higher degree of margin and I would say greater visibility of earnings, because the delays are not there when it comes to global orders. That's what my assessment is. And domestic, of course, I think there are certain projects in India which only L&T can execute. So they're in a sweet spot. Management have been focusing on return on equity, and the balance sheet quality is significantly better than when you go back to 2004, 2007, and a lot of value in subsidiaries as well. So L&T is like a must-own stock in your portfolio if you're benchmarking against the Nifty and Sensex.
Okay, well, Dipan, thanks for that. We'll come back to you. Let's shift focus on another space which we've not discussed, which is the IT services space. And there are differing views, right? I mean, Morgan Stanley on one end, extremely bullish. Nirmal Bang on the other end, which is quite bearish. So two ends of the spectrum, but that's what makes the market. Let's get an expert opinion on this. Sandeep Agarwal, fund manager at Shrivilo Investment Managers, is joining us now. Sandeep, of course, needs no introduction, has been a long sort of time watcher and tracker of IT services space in many roles prior to this. Sandeep, good to have you back on the program. So I'm not sure if you've seen these reports or these notes, etc., but what's your own view? Will higher for longer in terms of interest rates in the US mean slower for longer for IT services?
No, so, you know, this has been, first of all, thanks for having me on the show. And this has been simple mathematics, which has been going on for last 10, 15, 20 years. But I think post-COVID, few things have changed. And during COVID, in fact, that, technology has become more indispensable than past. And secondly, the labor arbitrage is again on a uprise between India and the developed markets in terms of technology resources. There is extreme scarcity of technology resources in developed markets. So I would say that while, in the past, it has been true that, a higher interest rate is generally not good for the tech sector, because finally your clients are from the developed markets, they become cautious and they want to be, watchful of what they're spending. But because of the indispensable nature of the business, because of the whole retail segment, consumer-facing segment going digital and live, I think, this thing is getting broken now. And in my view, probably the right time to sell probably was when the first interest rate hikes started happening. The right time to sell is not now, when, interest rate cycles are at the fag end of getting some notch higher. So I would say the smart investor would have actually moved into NASDAQ and into tech sector maybe 1.5 to 2 months. That was our view when we last met on your channel also. That was a clear view that, bottom is almost done in the last quarter results. I think from here you may see some time corrections in between, but I don't see you will see much of price correction in the large caps and even selected mid caps. Although I believe that some of the selected mid caps have run up again very sharply, and the valuation should be kept in mind.
Okay, all right. Hi, Sandeep. Good morning, Nigel on this side, and good to hear your thoughts. Well, since you're focusing more on the large cap names, could you tell us from the large caps, what is best place to do well from here? You have a couple of names in there. Infosys had some kind of support. TCS growth has been slowing down. Tech Mahindra, hope is that you have a new head on top, and hopefully things will work from here. Your take, which is best place?
So Nigel, let me give disclosure that we have exposure in our client portfolios and my portfolio also in the tech sector. But having said so, I would say this, that, in tech sector, it is very simple business. It is a B2B business in a sense, so that, around very few number of clients contribute to majority of the revenue. So whenever our leader comes from a large company to a smaller company, he brings in some of the clients which are his close relationship, and those clients may not be getting such attention in the previous organization. So that becomes a low-hanging fruit, and the sizes are quite big because it is a B2B business. And along with that, this ESOP plans and the authority to bring in more people from the team, all these things have played out extremely well. If you see last 4 or 5 years, 5 or 6 companies, we have seen same thing happening, whether it is Cyient, LTTS, Persistent, LTI, Mindtree, Coforge. If you see all these 6, and KPIT to some extent, 6, 7 examples, you will see that all the stocks have run up between 6 to 10 times. And the script has been same, that you have got a new leader from a large company to head your business. The leader has been allowed to bring in some of his team members. You have incentivized them with ESOP and all. So the script is same. I think TechM at this current level of margins is not sustainable. It will definitely, the margins will improve very substantially in next 1 or 2 quarters. And the stock will also see a good up move. That is what my sense is.
I wanted your thoughts on what Wipro investors should do, because there's several top level exits that have happened in the recent past, right? And the recent one was the resignation of Mr. Jatin Dalal as the CFO. If you're still holding that stock, do you expect it to underperform the rest of its peer set, and you churn out? What do you do here?
So a very good question. Actually, if you see, Wipro has not performed in terms of fundamentals for last more than 12, 13 years, in my view. And that will continue. I don't see that, Wipro is a turnaround story in that sense that it will be able to outperform the Infosys or the TCS or the HCL Tech or the TechM in terms of revenue growth or profit growth. But, the price at which it is trading and the multiple, it is extremely comfortable. The dividend yields are very good. The management keeps, the company continuously do buybacks. So I think this price is very good for the holder. Even a new buyer can enter into at this price. There is very low downside risk because, some of the mid-caps, they are trading almost like 2.5, 3 times multiples of Wipro today, which is little, too much stretched. So I would say that, this margin of safety in a Wipro is much higher. A little riskier bet will be Tech Mahindra, where the returns could be substantial.
Okay, all right, Sandeep, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. So that's on the technology space and how you should be approaching the entire sector. Let's just revisit the pre-opening rate, shall we? Looks like it's not a bad opening actually. that we have in store. The Nifty is indicating a start which is about 40 points in the green, and the sensex as well up about 280 odd points. What's leading from the front is ONGC. Of course, crude prices rising, it will have a negative impact on companies that use crude as raw materials. So keep an eye out on, aviation companies, tire companies. But on the flip side, names like ONGC are trending in the green. L&T, we were talking about UBS, raising the target price on L&T to 3,600. So that's the next big stock in focus, up about 1% this morning. And Reliance is also batting for the bulls. Sudarshan Sukhani is back with us. Sudarshan, what's the big call at 9:10?
Well, LIC Housing is a buy with a stop under 455.
And Mitesh, how about you?
I'll go with the buy on RBL Bank with a stop at 240.
Okay. All right. Thanks a lot for that, gentlemen. Well, Sonal joins us to tell us about the stock that she's watching because it's been moving with some momentum in our Momentumizer segment. Sonal?
Good morning, Nigel. Well, the stock on my Momentumizer segment today is Omex. The stock was up 17% yesterday with huge volumes. In fact, this week itself, the stock is high by 31%. And the volumes that it traded at were around 3.5 times the average that we see in this particular counter. In terms of turnover as well, there has been a massive movement on the NSE. Yesterday, the turnover was around 45.5 crore rupees, which compares to 20 crores the day before that. And it has actually been consistently increasing in last couple of trading sessions. So huge volumes is what we are seeing for this particular stock. Now, it is a real estate company. We don't speak about it much, but these NCR players seem to be doing really well. And this is based out of Delhi as well. In fact, the Nifty Realty Index, that is up around 2.5% this week itself. So seeing a lot of momentum there. So keep this one on your radar as well.
Okay. All right. Sonal, thanks very much for that. There's 5 minutes to go for the market open. L&T and Cummins are the other ones which will be in focus. Vivek is here with more. Vivek.
Well, good morning. A couple of interesting notes coming in from UBS this morning on the infra as well as the capital goods space. Remember, L&T has been in focus. The share buyback has just concluded as well. So what UBS is saying today is that, number one, they have a buy rating on the stock and the target price has been raised. They're saying that the company right now has a P&L that is cyclically positioned for the upside. Also, what they're saying is that the company's focus as far as stakeholder value creation as well as growth appetite is something that is improving. The new strategy that the company currently has is ensuring L&T's appetite for consistent new order growth. And they're also saying, along with the domestic orders, they're also seeing quite a bit of traction as far as the export order book is concerned. So what they're saying L&T is expected to record a healthy 17 and 32% CAGR growth respectively in the core sales as well as EPS from FY23 to FY26. On the other hand, UBS is slightly cautious as far as Cummins is concerned. Remember, a lot of capital goods players, especially diesel genset manufacturers, have to now go ahead and come up with new CPCB4 norm compliant diesel gensets. And there have been a couple of competitors, namely Kirloskar Cummins, that have gone ahead and actually made the diesel gensets. So UBS at this point of time is quite cautious on Cummins. They're saying that new compliant gensets is actually making the competitive intensity higher for players such as Cummins. Along with that, what they're saying they're quite cautious as far as the export business is concerned and see increasing risk of downgrades over the coming quarters.
Okay, thanks a lot for that. Well, Sudarshan is also with us to tell us why MCX should be on your radar. And this was a story that they broke earlier on CNBC-TV18. Sudarshan, over to you.
MCX will be going live on new technology platform from October 3. It's the platform for which MCX had signed agreement with TCS 2 years ago in September 2021. Now, earlier this year, MCX had renewed agreement with 63 Moons to use its platform till December, which was at a cost of rupees 125 crore per quarter, which was almost 100% of total sales of Q1 FY24. Now, if we look at the historical data, the cost for technology platform saw a major jump in last 1 year. In Q1 FY23, the cost was rupees 19.28 crore, which was just 17% of the sales. Now, come to Q4 FY23, it increased to 87.3 crore, which was 65% of total sales. Now, analysts assume once this technology platform of TCS is implemented fully and the platform of 63 Moons, agreement of 63 Moons expires in December, there will be a major cost saving for MCX. They assume that the cost of technology platform will come down to 10 to 12% of total sales from the current figure of 100% of total sales.
Okay, Sudarshan, thank you very much. And that perhaps will be one of the stocks of the day as we begin today's trading session. The rupee is open flat, and I have to say, guys, the pre-open once again is what?
Baffling.
You know, in the morning we were all slightly long faces, but look at what's happening there.
I think it's because you woke up on the right side of the bed that, you know, the market's opening.
I would love to take credit.
Always do that. Always do that, Prashant. Always works well.
You know,
the bulls would thank you.
And the pre-open rate, it's indicating that we're going to open fat at the 20 DMA.
Yeah.
So building on from here is very, very important. Otherwise, you know, from a bearish perspective, they'll be happy to see so much of green on the screen. It gives them a perfect shorting opportunity. So let's see how this one goes. But we're opening at the 20 DMA, which is surprising, but good from a bullish perspective.
And the only word is resilience, right? The market has been so resilient compared to our global peers. So it may or may not have to do with Prashant's you know, positive attitude this
credit
morning.
taken, end of story. Move on.
All right. But the markets are opening now in just a couple of seconds. So let's get straight down to it. Good opening. I'm sure the bulls would like it. 50 points higher on the Nifty. The sensex is up about 140 points. So all smiles if you're a bull, that is. ONGC is the big mover, up about 0.6%. Bharti Airtel, actually, the subscriber data was pretty good, so 0.5% higher there. L&T has that UBS raising target price to 3,600, so the street likes that. L&T is, in fact, your top Nifty gainer right now. HDFC Bank is up 0.3%. Reliance is up about 0.5% or so. So a lot of heavyweights are supporting the market this morning. But let's see how it goes. To be honest, it's still just a flat move with a bit of a positive bias. It's not like a runaway rally or anything. But the mid-cap index is having a better showing, so about 90 points higher for the mid-cap index. The advance decline ratio is now at well in favor of advances at about 5:1. So it's a decent opening. What's dragging its feet is some of the technology names. Tech Mahindra is down 1.5%. Asian Paints, BPCL, Britannia, Grasim, a couple of other stocks that are just about trending in the red. Autos are taking a bit of a backseat after a big rally that the stocks have had. We are also running into the auto sales numbers, and a couple of brokerage notes have come through on that. So you have Eicher Motors, Maruti, etc. that are trending a tad bit in the red right now. But otherwise, it's a quiet opening, you'd have to say, just about hanging on to the green line. For the frontliners, the mid-caps are having a better showing. I just wanted to also point out that the Bank Nifty is batting for the bulls today, so 115 points higher for the Bank Nifty. And a lot of, stocks, whether it's Ujjivan Small Finance Bank, Punjab National Bank, a couple of others are trending in the green and sitting at fresh 52-week highs. So keep an eye on that.
Well, that's right. So, a couple of stocks, they're continuing from where they left off yesterday. Case in point being Ujjivan Small Finance Bank. The stock was up close to around 8% yesterday. It's opened up with a gain of close to around 3% today as well. Manappuram Finance as well is opening up in the green with a gain of a couple of percentage points. So, good going on that front. A couple of other notable gainers in today's trading session. You have NBCC, massive volumes out there. They've announced sale of the commercial built-up space in World Trade Center, New Delhi. So that's why that stock's up close to around 3%. It's a big move is what we're seeing out there. The other couple of names that are moving well is Shalimar Paints. That stock is moving on larger than expected volumes normally. So that is up close to around 5% as we speak, currently moving to the high point of the day. The Nifty Bank is doing well. So a couple of these banking names as well are at the day's high. Bandhan Bank, we had a large trade yesterday. The stock opens up with a gain of around 2.5%. I recall there was a large trade at around 250 rupees odd. So the stock has moved closer to around 260 rupees. You have Dixon Technologies as well that continues to hold well in the green. On the flip side, Tech Mahindra, well, we had Sandeep Agarwal who was just telling us that has plenty of potential for the next few years. For starters, it's opening under some pressure, though he had mentioned the triggers are in place with new leadership, and he believes that the margins cannot hold at these depressed levels as well. So a good start, Prashant. If someone said that you will have the dollar index at around 106.5. You'll have Brent crude at $97 per barrel, yields at 4.6%, and the Nifty opens up 30%. I don't think you'll say it's okay. I think you would grab it with both hands.
Yeah, absolutely. I mean, Teflon coating, strong, thick Teflon coating is what we have. But I have to say, I mean, like yesterday, this is a bit of a global resilience, right? So a day before yesterday's US market weakness, which was pronounced, 1.5%, did not show up in Asia yesterday or in Europe yesterday. And last night's, equity market was flat in the US, but I mean, the three things, that yields, dollar and oil were all up. And that's not percolating in a big way. I mean, just look at what's happening in other Asian markets as well. It's more green. So keep that in mind. But, it's 26 points on the Nifty so far. Just a few more things before we bring in our market master of the day. You've got Ujjivan Small Finance Bank up 3%, Tata Investment Corp Tata Investment Corp is an interesting company. It's just a portfolio of companies. It's an investment company, so it's like buying share in almost like a PMS or a structure of stocks. And it basically reflects what's happening in the market, the underlying holdings, etc. That's been doing phenomenally well all of this week. Bandhan Bank is up 2%, I think, as Nigel highlighted. Senco is up 4%. We were talking about Senco with Deepan earlier. Senco is having a good week. Let me just see what it's done this week. It's up 30%. In a market which has not done very much, Senco continues to bump higher. GMR Power is up 3%. There is Jupiter Wagons, which is up 5%. So Jupiter Wagons is back to winning ways. It had a bit of a dip recently, but back up. Ujjivan Limited is up 2.5% as well. Cyient is up about 3%, so 1730 on Cyient. You've got Finolex Cables, which is up 2%. Venus Pipes is up about 3% as well. But then, down the list, volumes start to thin out a little bit. On the downside, anything large? Nothing. Apar Industries, maybe. It's done very well this week. So maybe that's the reason why it's seeing a 3.5% pullback on decent-sized volumes for that name. It's a large one. And that's 27,000 shares at the word go. Otherwise, it's all 0.5%, 0.75%, 1% in that range. Asian Paints is down 1%. So maybe, the oil price rise is showing up in Asian Paints, and we can look at Berger and the Kansai and some of the other paint companies as well. And ICICI Lombard is down about 2%. So that's the other one, which has volumes at least at this point in time. So that's essentially the market open on both sides, gainers and losers. Market breadth is positive with about 2.5:1 in favor of advances. Manish Gurvani is with us, head of equities of Bandhan AMC. Manish, good to have you with us here. Manish needs no introduction. Market veteran, seen many cycles, and of course has run large sums of money at various institutions earlier. Prashant here, Manish. As we were saying, right, some of the so-called macro variables are quite adversarial, but this is a different time in that sense, because it's no one's case that it's positive. All this is positive for emerging markets. It's negative, but within emerging markets, India is being favored quite a bit. We've heard that repeatedly from both global investors and local investors as well. So, are you still deploying, Manish, or are you in the camp which is actually raising cash? Because there is that cohort of people as well.
So, Prashant, we are not too much into cash. We are deploying whatever money we get. We see pockets of opportunity, although obviously markets have run up. Maybe tactically there could be a correction because some of the tactical indicators are looking stretched. But from a medium-term perspective, we still think there are a fair amount of pockets where, given that the domestic economy is doing well, given that our relative position, as you mentioned, within the emerging markets looks very robust. And also, I think that globally liquidity will be reasonably good going forward, because while nominal interest rates have gone up, I don't see too much of high real rates. And I think that is what can really slow down economies and produce earning downgrades, etc. At this point, I think while nominal interest rates are a challenge, but the fact is that there's a fair amount of money moving globally from bonds to equity is my sense. And so in that sense, liquidity is not too bad for equities, and I don't think it will become bad going forward. So overall, from that perspective, is it a distressed market where you will get a lot of multi-baggers? I don't think so. Is it a market where a lot of sectors will do well? I don't think so. So I think there are specific pockets you need to find where there is a reasonable earnings momentum and long-term fundamentals like return on equity and terminal value are decent. But I think it's going to be, I know it's a cliche, but I do think it's a stock pickers market.
No, I completely agree with you, Manish, because you're seeing it in the profile of stocks as well, right? There are certain sectors that are coming back in a big way. For example, let's just pull up the stock of Coal India. It's been the biggest mover this month. I mean, it's a gain of 30% almost in a single month. I haven't seen Coal India do that in a very long time. And I guess it's also because, the power demand has picked up in a big way, and there is this expectation that there'll be a further surge in power demand, and thermal power generation is all set to increase. So these are certain pockets that the street is latching on to. And of course, valuations for some of these companies like Coal India are not that demanding compared to peers. Would you agree with that? And is this a space to, jump onto despite the rally that we've already seen?
Yeah, in fact, I think probably the most exciting segment in the market today is this entire power/energy transition space. And so whether you're looking at domestic demand supply in terms of power, it does look like India will need a very strong capex cycle in power. And it's also getting married to this whole global wave of transitioning to renewables, which needs a lot of investments in the grid as well. So the entire value chain in terms of, let's say, the power financiers, power equipment, utilities, I think that's probably the best place to be right now.
Hi, Manish. Good morning. Nigel on this side. Manish, when you joined us the last time around, you spoke about a couple of domestic themes that you like. Domestic consumption, I recall, domestic cyclicals. On the capex side, as you just mentioned, power as well as healthcare and pharma. Do you want to revise this top 4 themes that you're playing? Power's already out of the way. You want to add 3 more?
Yeah, so I think rural consumption coming back via segments like two-wheelers, microfinance, we remain positive on that. I think US generic pricing cycle turning around, that also I think looks still quite, there's decent potential in that as well. Maybe the other thing which we are having decent exposure is the real estate theme. Now, the real estate theme, in terms of demand supply, probably now that oil has gone up and India's macro probably not as robust as 3 months back. But I think the added advantage in that theme is the consolidation on the supply side. Again, it's been talked about, it's been playing out. But given the addressable market opportunity, and if that consolidation keeps happening, I think some big companies may emerge out of that sector. So yeah, these 3-4 themes are what we're still banking on.
Okay, the 3-4 themes are what you're still banking on. Got that. By the way, I also wanted to mention L&T is actually a big mover right now. It's up about 1.5%. It's hit that 3,000 rupee mark. So that's a fresh 52-week high for L&T. And the market cap of L&T has now exceeded 4 lakh crores. So, almost 4.2 lakh crores in terms of market cap for L&T. In this theme, we spoke about power, the utility space, but, even the capital goods names, right? It's a big comeback that we've seen. And UBS put out a note this morning where they're saying that L&T is now focusing not just in the domestic market, but there's a big export focus as well. So is it too late to jump in here, or do you think that in these names as well, there's lots more upside?
So I'm not going to talk about specific stocks, but yeah, this entire energy transition theme also is leading to a lot of capex in the Middle East, because obviously Middle East also has a big initiative towards renewables as well as oil exploration and extraction at these prices. Obviously, Middle East is making a lot of money, right? Oil at 95, 97. And that obviously will translate into very healthy capex in that region as well. And overall, globally also, I think what we are hoping to see with some of our stocks is that there is a lot of optionality, because apart from demand supply, you also have to remember that a very big supplier like China is facing geopolitical issues. So if India can emerge as a big supplier of power equipment, I think that is an added optionality which may boost the return on some of these stocks.
Yeah, Manish, just hold on to that thought. I just want to pull up Tata Investments. Just pull up the intraday chart of that stock. It's up close to around 6%. Volumes are massive. And if you look at the last 1 month chart, the stock is up 40%. Tata Investments, we don't talk about it very, very often. I think it's hit a fresh 52-week high as well, moving to the high point of the day. Manish, just throwing this out to you. Any of these holding companies, how do you view them? Because some of these themes are played very, very well. whether you're looking at a Maharashtra Scooters, a Bajaj Holding, Tata Investment, just to name a few. Sundaram Clayton, by the way, as well, has done very, very well in the last 1 year as well, adjusting for that fixed investment that you've got, as well as the other shares that you will be getting for the demerged entity. Your view on holding companies?
Yeah, actually, that's another small pocket where we are positive on. So typically, I think most bull markets end with holding companies doing very, very well. So I think we are kind of building up towards that. And we have a few holding companies in our portfolio. Also, I think there is some policy move towards making delisting and demerging of these holding companies easier. But it's just icing on the cake. I think there is enough value in a lot of these holding companies.
Okay. All right, Manish. Thanks so much for stopping by and filling us in with your view on the markets. We look forward to having a chat with you in the days to come. Let's move on then, and let's talk about the home improvement theme. According to DAM Capital, under the homes improvement theme, pipes are a steady compounding space and provide safe harbor during rough times. We are joined by one of the leading pipe manufacturers here in the country, Finolex Industries, and we have with us Mr. Ajit Venkatraman, the MD of Finolex Industries, who joins us on the show. Hi, Mr. Venkatraman. Good morning. Thanks so much for joining us. Nigel on this side. Well, I wanted to ask you about demand first up. How is demand shaping up? Have you got a sense in terms of how are the inventory levels as well at dealers? And would you stick to that guidance? I think you were guiding for around 10 to 15% volume growth. On the cards?
We continue to give that projection in terms of 10 to 15% growth year on year. And that growth is expected for the next 4 to 5 years. We are seeing the demand to be fairly robust. There is some sluggishness typical for the Q2 for this industry. During rainfall, July, August, September, these months, the pipe sales is typically lower. And that is what we are seeing, but we are seeing a little bit of an uptick compared to last year.
All right.
The demand is likely to pick up after Diwali, and that is typically when the demand picks up.
Okay. All right. Could you split it up for us? This 10 to 15% will be agri and non-agri. How do you see both these two segments growing? Because I think as of now, 70% is towards agri and 30% is non-agri. So you want to split up the volume growth, and also, are you growing faster than the industry? Are you holding on to your market share?
Market share is something which is very difficult because there is no central agency which consolidates the numbers from various players in the segment. In terms of agri growth, we are seeing in the higher single digits, whereas for the non-agri segment, which is plumbing and sanitation, we are looking at upwards of 15%. So in the non-agri segment, we are growing at a faster clip than market.
And you've kind of, remember, sort of emphasizing this the last time you were on as well. Ajit, hi, good morning. Prashant here. On the raw material front, what's the situation? I mean, oil prices are now closer, almost in 3 digits. How is that feeding through into raw material prices?
See, raw material prices, I think there is not too much of a correlation between the crude prices and the PVC prices. PVC prices, the market is apprehensive of further price drop, and therefore we see a certain degree of sluggishness in the past 2 months, August and September. But our forecast doesn't seem to be indicating that. The PVC prices has been trading in a very narrow range between 75 and 82 rupees per kg. And we expect it to be in that range going forward as well. There is no reason why there has to be a significant change with respect to that. But the market reading seems to be a little bit on the price dropping side. And therefore, the network, the channel is being a little bit cautious in taking on more inventory.
Okay.
I wanted to talk, of course, Mr. Venkatraman, we'll come back to your business, but I wanted to understand with this surplus cash that you have in your books, right, almost 1,700 crores lying on the books, what is the plan? Will you be giving back to shareholders in some way? Will you be putting it to work, for expansion of the company? Because earlier you said that you will announce a plan of utilizing the surplus cash in a bit, but I don't think that has happened just yet.
See, we have an annual capex spend of close to $200 to $250 on an annual basis. We are also evaluating new projects, and that is something, if whatever is not utilized for expansion will be returned back to the shareholders.
Okay. So when you say evaluating new projects, can you tell us what could the growth triggers, growth avenues for the company look like over, say, the next 2 to 3 years?
See, as I had mentioned before, we are expecting the pipes and fitting segment to be growing anywhere between 10 and 15%. And for us, we need to get into the expansion mode given the capacity we have today. We need to look for expansion, and that's exactly what we are trying to do right now.
Okay, all right. Mr. Venkatraman, what is your capacity right now? And say the next 2-3 years, what does it head to? I think you're functioning at higher capacity utilization levels.
Correct. We have a capacity of about 370,000 metric tons for the pipes and approximately 50,000 for the fittings. And this segment, we are expecting that the growth to be happening somewhere in the range of 10 to 15%. And therefore, we already are at a fairly high utilization, approximately around 70%. And therefore, it is important for us to look at expansion.
So what is the number then? What does your pipes move to from 3.70 in the next 2 years, 3 years? It moves to what level? And fittings from 50,000, it moves to what levels?
See, last year we did 303,000 metric tons, out of which pipes was around 270,000 and fittings around 30,000. Fittings we expect to grow upwards of 15% and pipes approximately 10%. So that we have to do the math.
Okay, all right. Okay. So you're expecting, I wanted to know your capacity, but I think you're giving us the volume growth numbers. But let's keep that aside for the time being. What about this?
As I mentioned, pipe capacity is 370,000 metric tons per annum, and fittings capacity is about 50,000 metric tons per annum.
Got that. Okay. Got it. Also, if you could tell us your spreads, because for a business like yours, the PVC EDC spread is important. So what was it in Q1? What is it currently? And where is it headed?
So we were looking at around $250 for the PVC EDC spread. And typically anything above 250 is something which we are comfortable with. So so we are in the range after a long period of time, almost 2 years, we are in that spread right now. And we expect it to be steady at this point of time for the next 2 to 3 quarters.
I wanted to understand in this resin segment as well, there was a sharp contraction in PVC prices on a quarter-on-quarter basis. How is that segment doing now, and what is the kind of potential that you have there? Because earlier you'd said you'll deliver volumes of 230,000 in FY24. Are you maintaining that?
Yes, we are. We have, as you know, we have a PVC manufacturing facility in Ratnagiri. And typically during the rainy season, the ports are closed, and therefore we do have a inventory accumulation before the month of May. And when there is a significant drop in prices, it impacts the inventory, and there is an inventory loss we typically have to take. On the other hand, if there is a price increase for PVC, at that point of time, this comes to our benefit. And therefore, the drastic movements you have seen in the last couple of years is because of the volatility of the PVC prices. Since December of last year, 2022, till now, the PVC prices have been fairly steady. They have been in the range of $750 to $820 per metric ton. And therefore, we don't see too much of inventory gains or losses coming our way any of these quarters.
Got it. Ajit, just one last question. This Jal Jeevan mission, if you can give us a quick kind of snapshot view, is how much demand do you expect from this, or do you think the bulk of the demand has already come through for the industry, not just you?
Yes, it is completely dependent upon how the government releases the funds, and it has been trickling in. We do not deal directly with many of these government projects. It's just our dealer and distributor network which deals with it. And this has been very good for the industry in general.
So, what's the offtake for as an industry as a whole? You would have an idea. What has it been? Because Centre has been implementing this since late 2019, along with states. So, what's the offtake, or is it kind of slowed down?
It's a difficult question for me to answer because we don't directly deal with the government tenders.
Okay, all right, fair enough. We'll leave it there, Ajay. Thank you very much for joining us. Good speaking with you, and thank you for taking out the time and being here. We'll take a very quick commercial break here. We have the market, which has now slipped into the red. We were up 30 points. Now we're down about 14. The chairman of TRAI, Mr. P.D. Vaghela, spoke with my colleague Ashmit before he actually steps down from his post. That's an exit interview you don't want to miss. Interesting sort of chat about everything, including Vodafone Idea. Stay tuned for that conversation.
Welcome back. This is Corporate Radar on CNBC-TV18. Well, for now, the market is true to form. It sold the rally. So, it's a sell-on rally market, and we were surprised when we woke up to positive cues. But now the Nifty has moved to the low point of trade. It's, no drastic move, still very flat, but the sell-on rally trend is something that's playing out. With only a few days to go for his tenure to end, the chairman of the Telecom Regulatory Authority of India has decided to speak out. P.D. Vaghela sat down with my colleague Ashmit for what was his first and last interview as India's telecom regulator. Vaghela is worried about the loss of Vodafone Idea's subscriber base and its inability to roll out 5G services. He also spoke about the tussle between telecom service providers and OTT players, among other issues. Listen.
TRAI in 2018 has recommended that there is no need to regulate OTT. At that time, TRAI's main concern, at that OTT was growing, and TRAI's main concern is always, consumer interest. Consumers are getting something, free and cheaper, that, TRAI should, promote that. But in the last, 5 years, a lot of things have changed, and all over the world, and most of the telecom operators, they are now claiming that. And that their networks are congested because of the rise of the OTT, and and they should be compensated for for carrying the OTT content. So in that connection, government also had sent a reference back to us and asked us to do the consultation again, and we have issued a consultation, and it's a very, very contentious and very, very I would say controversial subject. The consultation is still going on. They had asked for more time, and we are yet to do the OSD. After OSD, TRAI will take an appropriate stand and give recommendation to the government on this issue. But it is a very, very fascinating subject, I should tell, and we have to be very careful both ways. That the OTT should not be stifled, its growth should not stifle. At the same time, how do we handle the concerns which are raised by the telecom operators? So, how to do a lot of balancing, I think. Thank you.
I think it's a very interesting answer that you give us in terms of setting the framework. A very controversial decision, like you said. But moving from one controversy to the other, I just want to get a sense of one of the aspects that defined the beginning part of your tenure was the AGR issue, the way it panned out. There was a lot of engagement that the TRAI had also done on the subject. I just want to get a sense that when history looks back at this AGR issue, you think this is a battle in your sense as a telecom titan? This is a battle that the centre could have done without in interest of the health of the industry?
See, whether we like it or not, license fee is there, and with license fee is there, construct of AGR will be there. And now, the settled question, the Court of Law, Honorable Supreme Court has given a judgment, and there has been accepted by the government. In that circumstances, we have to see how can, further we can work on that. So I think the issue is settled. There may be some issues or no, what should be the, part of the AGR and which should not be the part of the AGR. Recently, DOT has done immensely, a very good job by, giving further clarification. So, now the issue with the license fee, whether that is very high or it is very, what should be done about that. So, that an issue, I think, TRAI had recommended that license fee should be reduced, but government in its wisdom has not accepted that fact. That license fee is here at present to stay. So, an AGR definition has been, I think, has been now, I think, eased. A lot of things have been removed. Most important, the reforms. It has, for example, reduced the interest rate. Right, that is one thing. Secondly, penalty has been removed. Right? Bank guarantee had been reduced to a lot, to a great extent. Only 20%. Recently, we have again further, recommended there should be a single bank guarantee, performance and financial bank guarantee. And so that way, what I understand that, the kind of reforms the government has taken and the kind of, actions has been taken with regard to ease of doing business has helped the sector. So there are some issues still. For example, Vodafone, for example, it has not been able to implement 5G. And for example, BSNL again has now started implementing 4G with the indigenous technology. That is great thing. But they will be now, I think, implementing 5G also. So that concern remains that BSNL and Vodafone, they have not implemented 5G. In what way the competition will span out, and how will the subscribers behavior will change the subscriber base among the various stakeholders. Especially, we are worried that BSNL and Vodafone both are losing their subscriber base. So we will be very happy if Vodafone can implement the 5G at the earliest.
Okay, well, that's an interesting chat with the top boss at TRAI, of course, the outgoing chief at TRAI, with my colleague Ashmit. Telecom stocks on your radar, on your screens right now. Well, we're down about 30 points on the Nifty. We're at 19,685. Actually, maybe we can pull up Tech Mahindra just for a brief bit. It's now the biggest volume-led loser. It's down 2.5%. And 1255, it was not there earlier, but it is there now. Asian Paints has also added on a little bit more in terms of losses. Shreya's Shipping had a big up move yesterday. That is down 3%. I was talking about other paint companies. Berger is down about 1% as well. The listing from yesterday, Signature Global had a very good listing. It's down about 2%, 451 on Signature Global.
I think some of these paint companies, maybe because of the spike in crude oil prices, right? They could be weighing on them. And, that's the point, Prashant, we made in the first few minutes. So the market opens in the green, it becomes more tricky.
Correct.
From a bullish perspective, we actually like the market to open up down, because then you get a chance to enter. Here at the start, only a couple of bulls would have got trapped, and the bears would have seen it as good fodder because we opened 40, 50 points higher. So let's see how it goes from here. But clearly at higher levels, we're seeing resistance, the 20 DMA case in point.
Absolutely. I think that's I think about 50 odd points away from where we are right now, a little more than that now. Well, let's shift focus to one space which is actually done pretty poorly. I'm talking about chemicals and agrochemicals as a space. Now, an antique broking note in August suggested that the worst is largely over for domestic agrochemical players, and a bounce back in performance is expected for the second quarter onwards. Has the bounce back really started for that space? Now, we have Mr. R.V. Bubna, CMD at Sharda Cropchem, joining us now. Mr. Bubna, welcome back on the program. It's been a while since we've spoken with you, so it's great to have you. And Rajesh Pherwani is founder of Valcreate Investment Managers. Rajesh, of course, is a long-time, 20-25-year veteran in the space as an investor, as an analyst, and, of course, now runs his own PMS called Valcreate. Rajesh, welcome to the show as well. Thanks for your time. Mr. Bubna, let me start by asking you, what is the situation, sir, on the agrichem side for your products? Are we at a point where the glut in the system is largely getting over, or is it still pretty bad out there?
I won't say it's pretty bad, but it is bad. It is slow. It is likely and expected to go out slowly, but the process is a little slow than what we were planning, we were expecting.
What are the, just if you can elaborate that a little bit, what has happened, say, over the last 2-3 months? What is China doing? What is that doing to your volumes? What is that doing to prices? Just a little bit of explanation would help, sir.
So China has got trapped into overproduction. Some of their manufacturers, which helped them to produce too much, and now manufacturers are closed because they are loaded with very heavy stocks. And the same problem is in the distribution channel, in the transportation and destination countries. So this has to get, and also the weather has been not so friendly. So the consumption is less and the production is more.
Mr. Bubna, good morning. I want to understand also what's happening in Europe, because as per the Q1 numbers, you have a large presence in Europe as well. Is the slowdown as bad as what it was, say, about 6-8 months ago?
Madam, Europe situation is getting affected by this Ukraine-Russia war. The economies are in a little bit of a problem. Fuel prices are going up, and the euro currency is also depreciating versus dollar in the last 1.5 months. All these factors make the Europe situation also a little difficult.
So if the European situation is difficult, can you just help us, Mr. Bubna, with some numbers? How much does Europe contribute to your overall business? And a lot of agrochemical companies had actually cut down their full year guidance in Europe because of how tough the situation is. What would your own expectation be by the end of the year?
Madam, I expect the Europe to contribute to about 45% of our total revenues.
Okay, and 45% of total revenues, but what about the
45% of the agrochem revenues? Yes.
Yes. No, but I'm trying to understand in terms of growth numbers, revenue numbers. Are you expecting to see a fall in Europe over the next 1 year? And if yes, how much could it be for your own business?
Madam, 1 year is too long a period to predict.
Yeah.
But presently, I'm expecting the situation to improve, take a better turn by end of third quarter. And I would say that we may not have much of a growth in Europe and all over the world.
Okay, all right. Yeah, hi, Mr. Bubna. The first quarter was weak, but I think you were optimistic that you can grow in mid-teens. You're telling us now that for the year, you'll be more or less flattish, FY24 in comparison to FY23?
Sir, I'll be a little careful in making a prediction because situations are very much dynamic. But I was expecting second quarter to be better. It is better than the first quarter, but it has not improved as much as it was expected at the end of the first quarter.
Okay.
So for the year then, sir, will you grow, will you not grow? As of now, things are dynamic, as you said, so things can change. But as of current reckoning, do you expect to grow or not?
Sir, we will grow, but the growth will not be 15 to 20%. I would say now the growth could be about 8 to 10%.
Okay. 8 to 10% growth in 24 over 23. Mr. Bubna, just coming back to you, let me get Rajesh into the conversation as well. Rajesh, you heard Mr. Bubna at Sharda Cropchem. I mean, your own assessment of things. Mr. Bubna, you said you expect things to pick up fourth quarter onwards, right? Was it? I just want to make sure. Mr. Bubna, you said fourth quarter. End of?
Yeah. See, fourth quarter is the best quarter for most of the agrochemical companies because they're all season-based and the spring season is the biggest consumer of the agrochemical products.
Okay. Got that. Rajesh, come in. I mean, what is your own assessment?
I think I agree with Mr. Bubna on the situation on the ground. I think China has suddenly come back into manufacturing after COVID. And, during COVID, I think they had an extended COVID when they had shut down their plants for a longer period of time because of the government diktat. And when they came into the market, they have dumped the material in the various, markets world over. Europe has been particularly badly impacted, and that's why they're putting those sort of restrictions, import restrictions there. And at the same time, you look at some of these products like glyphosate, mancozeb, and 2,4-D. They have crashed. The prices have crashed in a very short period of time. So I think the situation on the ground today is pretty bad, and there's a lot of glut in the system.
Okay, that's well put. Rajesh, when we talk chemicals, it encompasses such a wide kind of businesses, right? There's, of course, chemicals, specialty chemicals, and then there is agrochemicals. What you're telling us is about with regards to agrochemicals, but is it, is the cycle very different for chemicals and agrochemicals? Or some of the factors are the same?
Yeah. So it depends on the products you're looking at. So, there are some products where, Indians are leaders. Some of the specialty chemical companies, you see, Indians are leaders. I've seen fluorochemical businesses have not got so impacted. And maybe some specific products where, some of the companies are operating, for example, ATBS or IBB, that the impact has not been so much as it has been probably for some of the other products like commodity chemicals. And if you look at agrochemicals, these intermediates are dime a dozen from China. China is a big player in agrochemical intermediates. So when I look at a company which is formulating and selling in Europe, there are two impacts that agrochemicals see. One is the prices of the raw materials go down, so your inventory gets hit. So there's an inventory write down. And the second thing is the formulation prices also directly crashing because they are generics, and there is absolutely no takers at the higher prices.
Sure. I wanted to understand what would all of this mean for players like Sharda Cropchem, in the sense, Mr. Bubna, you were talking about how Europe is a very challenging situation because of the Russia-Ukraine war. Things in China have been deteriorating. Would you want to change your geographic mix to focus more on the Indian markets, maybe not now, but over the next 1 to 2 years, in order to sort of, just sort of deviate from the kind of fall that we're seeing in global markets?
Madam, I want to remind you that our products are not freely tradable products. Every product needs to be approved and registered in any country or any territory that we want to market. In India, we don't have very good advantage because if we register, and we are doing the process of registration in India also, but in India, we'll have to source the product from India or China and compete with the producers in India. So that doesn't give us a very good advantage. Our revenues are more than 98% or 99% from outside India.
Yeah. You largely procure out of China and then sell to Europe. That's largely what the model has been. And of course, these are contracts, so as you said, not freely tradable in that sense. Rajesh, as an investor, right? You run a fund, a strategy within the PMS which focuses on specialty chemicals, agrochemicals, and you've been running that particular strategy since 2018. What are you doing now? Are you in a phase where you are adding in the hope of a revival at some point in the future? And where are you focused?
So, end of the day, for us, it's all about how the managements are able to maneuver out of this situation. And we've seen balance sheets of specialty chemical companies for the last 15, 20 years. I've seen them from 2004 onwards. And, at one point, there were no buyers in these stocks. There were hardly any participants as investors. And over a period of time, we've seen them do extremely well because of the China Plus One impact. The China Plus One story is going to continue for the next many years to come. So what I would do today is to buy companies which are managed by able management such as Mr. Bubna, and build a portfolio of companies which have the ability to tide over these cycles and rebound in the stability phase. I think that's the way I'll go about it.
So it is not about commodity chemicals or specialty chemicals or sub-segments within the space. That is not the criterion, Rajesh. Is that what you're saying?
It is a criteria. Definitely, I wouldn't go down the commodity cycle. A lot of companies that we buy are pretty complex manufacturing facilities, have pretty complex manufacturing facilities, and there are multiple stages in manufacturing of those products.
Would you, with full disclosure that this is not an advice for viewers to buy any of these companies, could you share with us what are your top ideas right now in the space?
We own PI Industries. We think that's a great business which has not been impacted by the cycles. We own Vinati Organics, again, a great company with a lot of, innovation in place. The promoters are pretty well known in innovation. We have RT Industries, a very full-time favorite of mine. We have Sharda Cropchem, which we think that will revive in a year or so. So some of these names, form a chunk of our portfolio. And I think I would also say that I don't want to say today that you go and buy them, but in the revival, some of these names will really, really bounce back.
Okay. In the non-agro business, Mr. Bubna, I just wanted your thoughts. What exactly is the game plan? At any point in time, would you look to demerge this business?
No, madam. We will continue to have the two businesses together. And non-agro is doing fairly well. I would say better than the previous year.
So yes, that's showing up in the numbers as well. I mean, you are sitting at almost about, I think, 170 crores of revenues in the non-agro business as of Q2. Can you tell us what is the growth looking like over there? What is the sustainable growth there? And would you be looking to make more investments in the non-agro division?
Madam, first of all, non-agro division doesn't require any investment. Like we have in the agrochemical business, because our biggest investment in the agrochemical is in the intangible assets, what we call registrations in. Non-agro are freely tradable products, and our only advantage is good quality control, timely shipments, and competitive prices. So,
Mr. Bubna, yeah.
So non-agro is doing fairly well. We are very happy with the non-agro business at this point of time.
Got it. That's the listing, by the way, the new listing which is coming through, and we'll have the rates come up in just a bit from now. Yatra Online is the new listing. I mean, a couple of listings a week. That's par for the course now. The stock's starting about 7% lower as compared to what they sold the stock at. I'll come back to Yatra in just a bit, but Mr. Bubna, thank you very much for joining us. Great speaking with you. Rajesh, great having you with us here on the program. Thank you very much. Insightful chat here, as always. Well, 30 points lower is what we have on the Nifty. We're at about 19,685. We'll come back. We'll focus back on that new listing, which is Yatra Online, in a bit from now. But I think we have Mitesh with us now to run us through what he's making of the market. There's been a bit of a turn. Mitesh, welcome back. Good morning again. 30 higher, now 30 lower. What's your assessment, and how are your trades faring from the morning?
So, it's come off the day's high, or rather where we opened from. Still looks okay to me. I think this looks like a time-wise correction, so trading will be more stock-specific. I have a buy on Syngene, which I would recommend buying with a stop at about 765 for targets of around 810. And the other one is Chola Finance, which again has given a good crossover on the hourly and the 2-hourly charts. So that's a buy with a stop at 1200 for targets of 1265.
Okay, by the way, the Yatra listing has been slightly on the weaker side. It was expected to be a soft listing, to be honest. And the subscription was also very, very low. Not too low, as in 1.6 times or so. And as we know, Yatra is a very popular, online travel company. It's the third largest online travel company. But muted listing today is what you've seen, a discount of about 10% to its issue price. So let's do one thing. Let's thank Mitesh for joining in and take a quick break. On the other side of the break, Manisha Gupta will put the focus on the commodity market. Stay tuned. Okay, let's go through what's happening in the world of commodities. Manisha is joining in with the one commodity that she's tracking today. Manisha, over to you.
And it has to be crude oil prices. With the kind of surge that we've seen onto crude oil prices, 3.5% overnight in case of WTI and almost 3% of gains coming in for Brent prices as well. So we are trading at the highest level in last 10 months, and this is the highest closing as well that we have seen come in for 2023. This is going to be the best quarter with 30% of gains since the early 2022, and prices are looking at very strong gains as we've seen into the markets. There have been various supply concerns which have been keeping the prices on the higher side here. Well, to begin with, the US crude inventories have declined for a third straight week, and markets were anticipating a 40,000 barrels of a decline, but we saw 2.2 million barrels of a decline coming in to 416 is the total stock now, which is the lowest in last couple of years. And not just the US stocks, but if you look at the Cushing stocks, those are the highest in 3 years as well. Markets have been projecting a deficit in the fourth quarter, and it's not just the banks and brokerages, but the major agencies like OPEC, IEA and EIA also have been putting out figures on how the supply tightness will lead to deficit in the fourth quarter is the reason you have seen that sentiment also already supporting prices as we see them now. Saudi Arabia outcuts, Russia export curbs also have impacted the markets, and this is one of the major reasons that we have seen prices gain up so strongly in this quarter itself. The US Oklahoma storage, as I said, also has been constantly declining. It is below the minimum reserve that they need to keep, and that has been supportive. So it's not just about the OPEC and allies, but the non-OPEC countries as well are looking at lower production and lower inventories. Add to that the fact that as the fundamentals are stronger, the hedge funds have had the most bullish bets on crude prices since 2022. It's at Feb 2022 highs, and in last 4 weeks we have seen the net positions continue to gain on a very strong pace, 15% on a week-on-week basis, and is the reason you have seen these gains come in for the prices. I just want to take you through on what crude prices have done in this year. We started this year for crude at $82 a barrel. We saw the prices decline all the way to $70 in the month of June. And from there, the prices have surged to $97 at this point in time. So it has been a $27 of a jump up that we have seen come in for this quarter itself. The major gains have come in last 3 weeks itself. So on August 23rd, we were trading at $82 and today we are trading at $97. So this $15 of a jump up has actually come in the matter of 3 weeks itself. The markets are looking at stronger deficits, and that is what the number seems to be showing us. Take a look at what the projections are now going forward when it comes to the rest of 2023, and much of this is about fourth quarter really, where we are talking about deficits. So whether it's about Saxo Bank, Probus Securities, they're talking about $95 to $100 a barrel. It actually is anywhere between 90 to 105 is what Goldman Sachs, Fat Profits, Bank of America also seem to be talking about. In the last couple of weeks, we have seen other banks and brokerages also revise their targets on the higher side. Wood Mackenzie has talked about 88 of an average, but take a look at this. 100 plus kind of level is what JP Morgan, ANZ, Exim Australia, Stan Chart came out with a report last evening. They are also talking about 100 as a substantial or an intraday spike that you could be looking at in the crude oil prices in the coming quarter. So bullish momentum continues when it comes to this one.
All right, Manisha, thanks very much for that. Well, oil is the big one, and we'll continue to track it with Manisha through the course of the day. The Nifty is back in the green, by the way. We're up 10 or 15 points, but that's a 45-point recovery. So we've had 2 whipsaws already, and this is just the first hour of trade. We'll take a quick commercial break here. We'll come back with our special show, Citizens Monetary Policy Committee, where my colleague Lata will get chatting with members of CNBC-TV18 Monetary Policy Committee to get a sense of what RBI can do on the 6th of October. So that's coming up in just a bit.